anyone that is trying to find some fundraising for your product, this is definitely the one for you. And we have the perfect person to dive into that. Our next speaker for this workshop is going to be, is the gardener providing minority-owned businesses with the nutrients they need to succeed. This Jamaican-American Atlanta native uses her gift of gab and strategic aptitude to create strategies that help early-stage companies scale through venture capital and strategic partnerships. Let's please show some love for Jaisa Gooden. All right, so she'll be coming up in just a moment here. We're going to talk about fundraising, and me, I'm a founder of my own production company, so I'm definitely excited to hear about how to get to the bag and how to scale through venture capital and strategic partnerships. So we will be here in just a second. Okay. All right, so Jason's going to be coming up in just a few moments, y'all. How are y'all enjoying the Thanksgiving Summit so far? Despite the technical difficulties, it's all good. We still having a good time. What has been your favorite part of the last two panels? So we talked about viability, scalability, and we talked about the bridging the gap between coding and storytelling. What has been your favorite part so far? Hey, Tiffany, I love seeing the Jamaicans do it too, man. Shout out to the entire diaspora here today. You're going to see a lot. This is DC. So if y'all are coming live, you're going to see Ghanaians, South Africans, Nigerians, Ethiopians, Jamaicans, Trinidadians. It's going to be a cluster. What I think is one of these Thanksgivings, we should just have a potluck, and everybody should just bring food. Forget the fancy restaurants. We should have a potluck, and everybody just bring their food from the different countries, and we just sit at a table and just have a good time. I think that's what we're gonna do next year. Gumbo, exactly. Yeah, gumbo. We definitely need some gumbo around here. So you're enjoying hearing all the new terms. Keep putting in the chat and let me know what you all are enjoying so far. Perfect. All right, so without further ado, my Jamaican show some love, my Caribbean show some love, and those Atlanta natives Caribbeans, please put your flags out here. We are gonna definitely show some big love for Jaisa Gooden.
Hi, good morning, everyone. Almost afternoon. Hope you all are up and moving and shaking. I know the Thanksgiving team has been going at it for weeks, getting ready to have you all, just doing all of the fun things for the conference this year. So appreciate you all for spending some of your morning with me. Ahead of that, again, I am Jaisa Gooden. I'm Vice President of Startup Banking for Silicon Valley Bank. I'm getting ready to share my screen so I can start running through the presentation that I have for you guys today. It's not anything too, much of a deep dive as far as the technical aspects of fundraising, but I do want to be able to share what this new market looks like as far as what you can expect if you are thinking about fundraising, if you're a founder, but I also want to give a point of view as someone who has made the transition into venture capital. So if anyone in the audience is also looking to potentially pursue opportunities in venture capital, I also want to share some point of view of what it looks like to navigate those career opportunities in this current market that we're in. Hold on one second, I'm working on the share screen. It's not showing me my PowerPoint window here. All right, well, we're gonna wing it without the slides. I'm pretty good at doing that too, but okay, sorry about that, making sure I got the technical side right. So we're gonna keep going without the slides so I don't waste any time trying to go through the technical aspects of that. But I wanna start with looking at the macro environment, right? So macro environment in venture capital right now, there are some highs that make it an optimistic, I would say cautiously optimistic time for founders right now. A big component of that is that there's over $1 million in dry powder available across private equity and venture capital. And that's something that stems from the fact that venture capital as an asset class has become more popular. So when you look at the large financial institutions like pension plans, retirement funds, the endowments, these entities have recognized venture capital as an asset class that they want to dedicate more funding to. So that means that instead of investing in the public market, they're giving these funds to the general partners who lead these venture capital funds, and they're having the trickle down effect of investing in founders. And as founders scale their companies, those VC funds are getting even larger, and the cycle is continuing. So, of course, this is a trend that we've seen for the past 10 years where these venture capital funds have been able to raise successfully. But the challenge that we're having in this market is that capital deployment has slowed down a lot because of some of the headlines that you've seen in the market about how startups are not necessarily performing as well when they go into the public market. You think about a WeWork or the different companies that have had these monumental rise to fame and then collapse when they aren't actually able to deliver on the business models and the returns for their investors. So there's this hybrid situation where there's a lot to be excited about because the capital exists, but then at the same time, the goalpost has moved as far as what it takes to be able to raise that capital successfully in this environment. So overall, over 52% of funds, or 52% of funds have slowed their deal pace over the past 12 months. And looking at a global scale, global VC investments have fallen over 47%. Overall in the market, we're looking at lower valuations, we're looking at fewer investments, and we're looking at fewer investments that lead to an exit. The exit is when the fund is able to return the fund, and then those additional profits are used to be able to invest in more companies. So these type of outcomes are necessary in order for the market to be successful. But in this current down cycle that we're in, which typically lasts 12 to 18 months, and we're at roughly like month, I would call it like maybe 15 to 16, depending on who you ask, you start to see a turnaround as the different milestones of recovery take place, and you start to have more people who are willing to increase their risk appetite to take on new deals. But I feel like I jumped right into, the high level understanding of what today's market looks like. I want to take a step back also and just talk a little bit about what I do and the point of view that I'm sharing from. So in my role as Vice President of Startup Banking at SVB, I'm focused on early stage companies. Early stage companies means that companies, let's call it $5 million and under, both in revenue and capital raised. Those are my clients, and the territories that I focus on are the greater Atlanta area, as well as the mid-Atlantic, which includes the DMV area, as well as Philly and Delaware. So within these geographies, I'm responsible for managing relationships with founders that are looking for a commercial banking relationship. But at SVB, that's only the foundation of how we support founders. We also help them with fundraising, we help introduce them to investors, and we help them navigate their local tech ecosystem through events. Right now, I'm tuning in with you all from Miami at Art Basel. I'm here with the activations that we have for founders to be able to get connected with the investors that come out for Art Basel. And we are essentially the bridge that helps connect founders to capital, to customers, and also to talent. I would say those are the three ways that I support founders beyond the typical commercial banking products that we serve. So with us being the bank of both founders as well as a lot of VC funds, we see so much information go back and forth through the banking transactions, through the relationships that we have. And it gives a special point of view as far as the market trends. So every quarter we put out reports on the state of the market, what those deals look like. So as I'm talking through these facts and these references to deals, I'm speaking from the point of view of what we've seen at the bank. So if you all have any questions or follow-ups, I'm big on sharing resources. So you all can look up our state of the market report. It's available for free. You don't have to do any, heavy sign up or open an account with us in order to have access to that type of information. We also do sector specific reports as well. So State of FinTech is one that we recently issued. We also issued one on the state of women's health. So looking individually at investment sectors that are doing well. in the industry and what the future trends look like. So speaking to that quickly, some of the emerging trends that we're seeing specifically for corporate venture capital funds, which a corporate venture capital fund is different from a traditional one because it's affiliated with a major, let's call it Fortune 50 company. So example would be like American Express Ventures. Someone just mentioned the Amex brunch. Like there are different large financial institutions or just large companies that will have a venture capital fund associated with their company. And so we had a survey that we did for those particular investors that we work with, and the emerging tech trends that they're most excited about. I'm sure there'll be no surprise. Artificial intelligence came up for 74% of the investors that we talked with. And in particular, generative AI, AI infrastructure, non-generative AI, and also the like machine learning based models within AI. In addition to AI, we also heard a lot of them, 50% mentioned fintech, as well as frontier tech, which includes robotics, IoT, next-gen semiconductors, quantum computing. These are the sectors that we're seeing investors be more excited about, and excitement translates into urgency in deploying capital, whereas typically what we're seeing a lot of founders deal with now is that an investor is not particularly excited about their sector. They're taking longer with diligence because they have a harder time getting conviction that the investment is something that can succeed in this particular economic environment. Because when it comes to a startup, the number one indicator of success that I've seen is timing. So you could have a great business model, you could be solving a major problem, but if the society and the timing and the world that we're in is not in alignment with the business model that you're solving for, then it's going to be harder for you to raise the capital because it's not going to be the focus of the investors at the time. Doesn't mean you don't necessarily have a good business. It just means that you have to find a way to make your problem fit the timing of what is most urgent for the investment sectors that the dollars are going to. All right, so next point I want to also touch on is that there's an urgency when it comes to runway right now. A lot of founders, companies are in a position where they have to raise, and that's really driven by the fact that the goalpost has moved for what a Series A looks like. So a lot of founders were able to raise successfully in the 2019-2020 time period going into the pandemic. And a lot of that was also driven specifically for underrepresented founders because of the George Floyd situation and the way that, to say this casually, a lot of people were now paying attention to the urgency and the need to give capital to underrepresented founders. Unfortunately, for a lot of the initiatives we heard about, they turned out to be more PR campaigns than actual true commitments. And so now we've shifted into this, let's call it post-George Floyd era, where now founders are having a different experience, but not even just founders, even investors, in particular, emerging managers who come from Black and underrepresented backgrounds. For them, it's taking longer to raise funds because of the macroeconomic environment. And so that is also impacting the ability for them to be able to deploy capital. And, you know, it's understood that in a lot of cases, underrepresented investors are the ones who have better synergy with underrepresented founders. And there's a preference for them on their cap table just because of the ease of the understanding of the business model. So there's a higher impact that these founders and investors face with this change in climate. And I don't like calling it the post-George Floyd era, but with the shift of how capital is being deployed and the way that commitment to capital in this particular sector has shifted over the past year. So I want to change the topic a little bit and talk specifically about how rounds look different right now. From a founder perspective, this is incredibly insightful if you're thinking about raising capital, because more so once you get to the seed to Series A level, you've seen more changes around how those rounds are structured. So pre-seed and seed are still pretty standard. At pre-seed, I'm seeing $1 to $2 million being raised at an $8 to $12 million post-money valuation, which is what the company is worth after the dollars are invested. So when it comes to valuation, you hear this topic a lot. So there's pre-money valuation, post-money valuation. Pre-money valuation is what your company is worth before you receive the capital. And so these numbers are important because from an investor standpoint, that is how their position and their ownership is calculated on your cap table, which is the summary of all of the investors and ownership in your company. So if your valuation is too high, an investor isn't able to make the type of return that they're looking for. So it's challenging for a lot of founders right now who have successfully raised a seed round, but are finding themselves in this situation where they're not able to close on a Series A because the metrics have changed for what constitutes a Series A round. And so now they're trying to raise a bridge round, which is what you do in between a priced round where you're looking at the actual change in equity on the cap table. So at the pre-seed round, it's pretty standard, 1 to 2 million. Like I said, looking at roughly pre-revenue to 100K in revenue. And yeah, I like the comment from Kofi. Like, I want you guys to be able to ask me as many questions as possible. So please start thinking about that as I'm running through this. So that's what a typical pre-seed is looking like right now. The seed round is looking like 3 to 5 million at a 12 to 18 post-money valuation. And that is with a company being either pre-revenue or up to 300K in annual revenue. The seed plus round, which is in most cases the bridge round that comes between the seed round and the Series A. And this is where I'm seeing a lot of my clients right now. They're looking to raise an additional 2 to 3 million at an $18 to $25 million post-money valuation. And that's with about 300K to 1.5 million in annual revenue. So this, I would say, is the sweet spot where I'm seeing a lot of founders drowning right now. And those founders are looking to find alternative forms of capital because there are not as many VC investors who are willing to jump into a seed plus or bridge round because the valuation is higher. And so it's not as ideal for them to have the highest returns to jump in if they're not the first money in the round. And so what I've been telling founders right now, and what I think the new environment is going to look like, is that you're going to have a lot more founders who are focused on scaling the company through revenue and customer acquisition versus trying to scale the company through growth capital, whether it be angels or VCs. So a lot of founders I know right now, they're either pausing fundraising altogether, or they're only working with investors who can directly help them drive their customer outcomes and customer relationships, or are making direct intros to customers. So that's something that I advocate for because I've seen founders burn themselves out trying to raise capital and not able to do it successfully, even though they have a good business model, versus founders who double down on customer. They get those letters of intent, they get those annual contracts, and then they use that as leverage in their investor conversations. So that's something to keep in mind as you're thinking about where your company may potentially have challenges when it comes to runway, because companies are raising seed rounds successfully, but they're planning the runway for a certain amount of time based on the way that Series A used to go. But now they're finding themselves having to raise additional capital because it takes longer to raise the Series A. So this is something to keep in mind because the Series A is where the biggest change has taken place. And then I don't remember if I fully said the Series A one, but just to repeat it, if I didn't, the Series A round today looks like $8 to $12 million at a 40 to 60 post-money valuation with a roughly $1.5 million ARR, which is annual recurring revenue. So want to give a shout out to Henri from Harlem Capital for these numbers in particular, because I use these rather than the other sources that I've seen, because as an investor who invests in that space, he's seeing these deals consistently. And I felt like it most closely aligned with what I'm seeing my clients say as far as how they're structuring their rounds. But we, again, have these type of numbers in our State of the Market report, if you want to reference it for raising capital as well. I would recommend the head of insights for Carta. His name is Peter. Follow him on LinkedIn. I know his name isn't Peter Walker, but that was the first name that came to my head. But I'll follow up with his last name. But he's the head of insights for Carta. He puts out really good visual data around what deals are looking like in the market right now, and just guidance around helping founders navigate the cap table considerations as they're continuing to scale their companies. So I want to make sure we have time for questions. So I'm going to switch over to the second part of the conversation that I wanted to focus on, which is more around aspiring VCs and what it looks like to break into VC right now. This is something that I've seen significantly, both in my current role, but prior to this role, I was also head of partnerships for HBCU VC.
All right, y'all. So we're having technical difficulties. The Wi-Fi don't want to see us win today, but don't worry. Jaisa has so much more to give you guys advice on as far as founders, which is what she switched into just now. Wi-Fi is trying to sabotage, but the Wi-Fi will not win. We are gonna win. Y'all still seeing a blank screen, or y'all seeing me, and can y'all hear me? Let me know if you guys can see me and hear me right now before I continue talking. I don't want to just continue talking if y'all cannot hear me. Can y'all hear me well? Unfortunately, we would love to have more attendees at the in-person, but we are sold out. It would be at this point, for safety, we can't have anyone else in the party. We're completely sold out. Thank you. I can see y'all hear me and see me. So once again, just to reiterate that again, we would love to open up more tickets for the in-person, but we are completely sold out. We don't have any more space to give, and we want to make sure that everybody's able to be in the audio field and be comfortable. So we cannot open up any more tickets. But 2024 is not too far away, so we definitely look forward to having y'all in 2024. Hey, maybe we need to take the not the Raven Stadium. We need to take the Commander Stadium next year. We don't got no more in-person tickets, Sean. No more in-person tickets. The most we could probably offer y'all is like the after party for real. But we have no more in-person tickets, unfortunately. I mean, that's a great thing. We're gonna, larger space for next year. That's what I'm saying. We might have to take the Commander Stadium. Or we might have to take the Washington Nationals baseball field or something like that. But we're glad that we are able to have a platform where we're able to assist multiple people of color to get into tech. We're glad that we're able to continue to grow this platform and that y'all continue to support us too. And if you're not able to come in person, you'll definitely be able to tap in virtually. We are going to live stream it, and because it's going to be live stream and there won't be as many people, nobody's going to be coming in and out, so you'll just see the live stream. We shouldn't have as many technical difficulties, so definitely tap in for the live stream. The Thanksgiving Trinidad, I love that. I'll go to Thanksgiving Trinidad. Thanksgiving Nigeria or Ghana down the line too. Hey, Thanksgiving Nigeria gotta. Hey, where are y'all tapping in from? That's really what I want to know right now. So I like this Thanksgiving Nigeria, Thanksgiving Ghana, Thanksgiving Trinidad. So say Thanksgiving and then where you're tapping in from. Put that in the chat for us real quick. Okay, looks like Jaisa will be coming back in just a moment. Which sessions will be virtual tomorrow? So we will be. Let me double check and get back to you on that. But all of Friday for sure, we will be streaming the entire day. If you can't make it in person, just go to the Thanksgiving Summit website and you'll be able to see that. Yeah. So you keep tapping in and saying where you're checking in from. Thanksgiving, New Jersey. Hey, I'm in North Jersey as well. You know, Delaware kid living. Is anyone from Delaware in the building? That's what I really want to know. So Puerto Rico, we got people from Puerto Rico in here. Thanksgiving logo, Maryland, Thanksgiving, Reagan Airport. You got, oh wow, you at the airport, so you come in. Love that. Berlin. Okay, we got some HBCU cats in the building, HUs in the building. Who's the real HU? Is it Hampton? Is it Howard? Just know I'm going to ask that question tomorrow. I like inciting riots, so I'm definitely going to incite a riot with that tomorrow. Lincoln University, the first HBCU, is in the building too. Shout out to all my HBCU students. Um, So I'm gonna check right now as far just to double check as far as streaming tomorrow. But once again, I know that Friday we will have streaming going on. So you guys can't go in person. Definitely tap with us online so that you all can get all that you need. And definitely join the Discord as well. Because in the Discord, you're able to connect with different people that are part of the Thanksgiving team and continue to, just as we're talking in the chat, continue to speak to the community. You never know, that could be a job offer, that could be a way you can get a certification. There's so many opportunities that can come from just being a part of our Discord. So make sure you all go to Thanksgiving's Instagram or Thanksgiving website and then just sign up for the Discord. Okay, Jaisa is about to come back in just a few moments. So once again, get your questions ready. Get your questions ready, and we'll be good to go. All right, Baltimore, you will be in person on Friday. Oh, we got Kenyans. So are any Kenyans in the building? And once again, if y'all have any questions, there are multiple concurrent text givings right now. No, there's only one text giving right now. So Jason's back, and I'm gonna wait for her screen to pop up, and then I'm gonna let her take over. I'm gonna let her take over in just a moment. But no, there's one text giving going on right now. We just have several days of events. We have today that's virtual, and then we have Thursday in person, and then we have Friday in person. And we look forward to seeing y'all on those days. Then we have Saturday, we're gonna have community service, and we're also gonna have brunch. The after part about the party tonight. Yeah, the party every night is going to be worth the commute. Make sure you pull up to the welcome event. The welcome event, we have over 300 people that are RSVP to come. So it's going to be a packed house. It's going to be a great time to, connect and just, have some fun over some drinks. And then definitely the party later in the night is going to be worth it. DC is a city that you really can't miss. And the co-founder of Thanksgiving, both DMV natives, and we have a lot of other people part of the Thanksgiving team, or part of the Thanksgiving team that are DC natives. So make sure y'all pull up to these events because it's gonna be popping all week. Like I wish I was gonna be at these late night parties with y'all, but the way I got a host, and Jason's back, so we're gonna let her take over. Let's make sure you good to go. Let's see. Okay. So when Jason comes back, we're going to start with the welcome event is at the Cambria Hotel. When Jason comes back in, we're going to jump right into her Q&A. So you'll start thinking about questions that you can ask. All right, so she's coming back in right now, y'all. So get ready for Q&A. Please have your questions ready. You good?
I can hear you.
I can hear you too.
Okay, great.
Okay, perfect. Okay.
So we're going right into Q&A, right? Or should I pick up where I left off?
All right, so we're gonna jump right into Q&A. I feel like we only got like.
Can you hear me?
Can you hear me? Can you hear me? Can you hear me? I can't. I hope you're not freezing. We're gonna jump into Q&A if you can hear me.
All right, and we're back.
We back?
Yes.
Okay, perfect. Cool. All right, so we're gonna jump right into Q&A. We only got a few moments left, but thank you despite technical difficulties, you still gave us a lot of gems. So thank you for all the gems you gave us. So we had a question. Can you repeat the investment round and post-money evaluation values?
That might take me a good little minute to run through that, but I'll try and do it quickly. So for the pre-seed round, it is looking like 1 to 2 million, typically at an 8 to 12 million post money, and that's with 100K in revenue. Seed round, 3 to 5 million, 12 to 18 post money, and up to 300K in revenue. Seed plus, 2 to 3 million, 18 to 25 post money valuation, and up to 1.5 million in ARR. And then last but not least, Series A, 8 to 12 million, 40 to 60 post money, and then 1.5 million and up in ARR.
I think that was a great summary. So next question, knowing everything you know about VC banking, startups, founders, and business, which cities or states are the best to live in or move to take, optimize, and best position? Sorry, I lost the question. And best position our businesses. So which
that's a great question. The city to live in definitely varies depending on the sector that you're in. Like, for example, if you're doing anything healthcare related, Boston is the best it gets as far as the healthcare industry because of the number of hospital systems and potential customers. So if I were to say high level, I would say you need to live where your customers are, because that is the best way for you to be able to get those type of relationships. Like if you're a fintech and you don't want to be in SF or New York, then Atlanta is a good city for you to consider, because Atlanta is called Transaction Alley because of all the credit card processors and that side of fintech that is based in the city. So you want to know, based on your sector and the business you're building, which city you should be in. If it's cybersecurity, you want to be in DC. So I would cater it to that type of approach.
Perfect. Sean, somebody asked, are you all seeking investors, and do you have to be an accredited investor to invest in startups?
I'm not sure what he means by are we seeking investors. We do have VC clients. And so if you mean like if you're an emerging manager and you're looking to bank with SVB, yes, we have a team that's dedicated to that. We have an emerging manager team is what it's called. And I have a colleague that I can introduce you to if you're raising a fund and looking to open a bank account. And then to be an accredited investor, to invest in the startups. Yes, for the most part, there are some exceptions and distinctions on what an accredited investor includes, because for the most part, it's been income-based for the past year since the legislation changed to even define what an accredited investor is. But they also have some accommodations for people who are in the industry. So if you work in the space, there are some ways that you can be able to invest in startups. But even in the world of crowdfunding, there are platforms that allow you to have an early taste of what it means to be an investor through giving small money to founders who are raising through like a Kickstarter campaign or on the platform Republic. That's a great one for people who are looking to learn more about how to invest in companies.
Perfect. What was the attraction to getting into VC? What was the attraction to getting into VC? And then
that's a good question. And that second sentence is funny because I remember one time I went to a VC networking event and I had someone say to me, he was like, "Why do you want to be in VC? It's full of old white men who went to Harvard, and you're not an old white man who went to Harvard. So what's the appeal? Why are you trying to do this?" And for me, the drive is realizing when I learned about venture capital, it's like, oh, this is how, entrepreneurship really works. Because for me, my understanding was that it was only for people who already came from wealth, but venture capital gave me exposure to understand how people were able to give themselves a safety net, essentially, to be able to grow companies. And so for me, I wanted that information to be accessible to people who had been like systemically excluded from benefiting from that type of wealth. So that has been my focus and why I am in this space, to have these type of conversations, to spread the knowledge and to make sure that there are more people who get the access and the opportunity and can see themselves as entrepreneurs because they understand that there's a pathway that allows them to do it, even if they don't come from wealth.
I love that. I don't see any more questions in the chat as of right now. So being that you are trying to spread this knowledge to, to minorities and to underrepresented communities, what are some roadblocks that you have faced when trying to spread that knowledge?
Roadblocks? That's a good question. Sometimes it can be your own people too. Like not all skin folk or kinfolk. There are a lot of people who like to be the only one in the room and are more like gatekeepers than they should be. And so for me, like being able to have opportunity to look those people in the eye and tell them to get out the way, like that's my role to play right now, so that there can be more people in the room. So that's definitely an obstacle that I've experienced. And then, just always being in a position to have more people in the room. And then also to like hold allies accountable. That is a challenge because especially when it's not trendy anymore, people have lost the sense of accountability that they felt before to do more. And so I'm literally sitting in team meetings like, hey, if you have a Black founder, don't just send them to me. Like if you have a Black founder, you need to support them and you need to understand the resources that are available to them. If we're really going to stand on these type of initiatives and have this type of impact, it can't just be a few people doing the work, because that's just free labor. I literally said that. I was like, you're just putting additional labor on your colleagues who come from the backgrounds that already carry the burden when you just try to pass the hot potato. So like continuing to hold allies accountable, continuing to hold gatekeepers accountable, and continuing to be vocal about, the people at the top. And when I say the top, I mean like the limited partners, because for me, that's where the majority of the money sits. And when you look at a systemic issue, it has to essentially come from the top. And so there are firms that have these huge mandates like Cambridge. Jasmine, who's there, she's doing phenomenal work at that level. You have people like Tasunda who are at institutions like TIAA, where you're able to have that type of just leadership that leads to decisions changing that give people more access. So being able to be in the room to build those relationships, to bring people together, that's my focus. I'm more focused on like the solutions versus the obstacles. So when I think about what the obstacles are, I hope I addressed that a little bit, but like I wanted to also share what I'm doing to address the obstacles that I've seen.
No, you answered it perfectly. That would be my next question was going to be, how are you, finding solutions for these obstacles?
Mm-hmm.
And I feel like you said it perfectly. You're being vocal, you're holding people accountable, and you're doing the work yourself. So we have another question. What sectors or industries are you currently most interested in as far as let's see,
Yeah, that's a good question as well. For me, I care the most about climate tech right now, honestly, because software is not going to save our environment and only investing in companies that have bottom line efficiency is not going to get us where we need to be as a society. So I'm really big on ed tech and climate tech right now because I really care about the impact more than I do the profit. If I'm looking at it from a sectors I'm excited about from a dollar standpoint and what they have the opportunity to do as far as being the next wave of billion-dollar unicorns, then it's definitely artificial intelligence, especially in the space of the creative industries, which has some negative impacts, but I think it can be curated in a way where the talent of creatives is amplified by AI technology. And I think that excites me because it accelerates the ability to be able to create and to be able to give more artists control of their IP in that creation by leveraging these type of technologies. So I would like to see it done the right way, but of course there's a lot of potential for it to be done the wrong way. So I'm hoping that we get it right. And if I were to say one last one, I would say AI in healthcare as well, because I've been to some sessions around the use case for that and being able to have more accurate diagnosis of disease, especially things like cancer, and making sure that people don't have to go through chemotherapy if they don't need to. Those type of implications of AI in particular that have health outcomes, that have environmental outcomes, and that have like the ability to just improve the day-to-day life of people versus just the benefit of corporation and saving money. Like those are the type of companies that I feel most excited about.
love that. Love that. Dialing back a bit, Femi asked a question. Speaking on minorities, what does the funding landscape look like with SVB for these founders?
What does the funding? Oh, okay. So how does SVB provide funding to
Yeah,
founders? Okay, that's
yeah,
a good question. So with SVB, the bread and butter of what we do on the funding side is venture debt. And what venture debt allows is for founders to retain equity in their companies as they raise additional capital. And our venture debt options kick in at the Series A inflection point. So when a company is raising their Series A, let's call it a $10 million round, we'll take 20 to 30% of that round and structure it in a traditional term. Well, it's not traditional because it's based on underwriting with venture investors, but we'll take 20 to 30% of that round and offer them a term sheet that's debt oriented. So it's a term loan, and that debt will allow them to raise a full $10 million, but 2 to 3 million of those dollars, they're not giving up equity. They're just doing it in debt, and they pay back that debt at the maturity date in the way that you would a traditional loan. So we underwrite those loans based on the relationship with the VC investor. And one way that we're doing that specifically to support the Black and other underrepresented founders in our portfolios, we have a network of investors who we work with that specifically serve these groups. And those investors, with the strength of the relationship that we have, we're working with them specifically to identify opportunities to provide them that type of capital. And typically, like I said, we do this for Series A and beyond, but for these select funds that specialize in these founders, we're in the early stages of figuring out what it looks like to offer this type of financing at the seed level. And at the seed level, it's a little more structured where there's not as much variability in the terms of how we structure the debt, but it's kind of like a copy paste way for us to do seed debt in a way that gets money out a little bit faster by just having a standard offering that we give that addresses that gap that happens between the seed and the Series A. So those are the projects we've been working on over the past year to make sure that these founders are getting the same opportunity early, because a lot of times Black and underrepresented founders need that money earlier, and they don't have the same like friends and family type situation as we know. So this type of financing fills that gap.
Perfect. Well, thank you so much. So we are at time. Do you have any last words that you would want to say to the people before you go for the day?
Yeah, I just want to encourage every founder that's raising right now or that is just focused on scaling right now to keep at it, to seek community in what you're doing. Don't try and do it alone. Find other founders who are raising or have raised and get, the opportunity to speak with them, whether it's from a venting standpoint or from an access to resource and relationships. Just don't try and do it alone. And also same for anyone who's looking to break into VC right now. I did it through community. Everyone who I know who has had success in it has done it through community. So that is my takeaway for anyone looking to do the work in this space right now.
For sure. So thank you so much for taking the time to speak with us today. Thank you for continuing to do the real work that we need to enrich our communities. And we appreciate you. Enjoy Art Basel and have a great rest of your day.
Thank you. I'll see you guys tomorrow.
I'll see you tomorrow. All right. That was I really enjoyed that session. I really enjoyed hearing about the work that Jaisa is doing and continue to do for our people. And we're going to continue to move along. We are now going to pivot a little bit. We talked about products and viability, scalability. We talked about founders, how you can get to the back. Now we are going to talk about
thank you so much for
some
innovations, bridging the gap between
that can help
coding and storytelling. I hope those creatives
business
definitely got something from this. As a creative, I definitely learned a lot.
So first, we're going to talk about blockchain.
But what we're going to learn about right now, for those that are
just a moment, we're going to talk about blockchain in the human psyche. Our next speaker is a blockchain enthusiast, working relentlessly to make the world a better place through decentralization. This